a couple of the headlines that have been really standing out. The biggest one was this First Century Road to Housing Act. You see, you want to kind of just give us a preview of like catch us up to a timeline on this thing.
So President Trump made headlines in January of this year when he said that he wanted to ban institutional ownership of homes. And that started this process, which has ended with legislation that's called the 21st Century Road to Housing Act. Now, the institutional ban has gotten all of the headlines. There's a lot of other stuff that has become a part of the legislation. And we talked about this last quarter. It was important to talk about them because I wanted to bring you up to speed. So we'll do a little bit of that here.
Yeah.
But there was one really important part of the legislation that I took a really big stand with you guys and said, we got to change this. Which, for anything political for me, it takes a lot to say that. I try to keep it apolitical here. But this was something that was really going to hurt affordability. And so I have a good update for you on that.
Cool. The thing that you took this like stance around was this ban on institutional investors, you see.
Well, to me, it's getting the biggest headlines when it comes to this thing, and it has the least impact.
Yeah.
I want affordability for all. The way that you do that is you solve the supply side of this. So you build more homes, you cut the red tape, you increase density. But this is getting all the headlines. So I wanted to point it out that just how little impact it's going to have, just for everybody's knowledge. Institutional investors currently own less than 1% of all U.S. homes. You can see that here in the numbers. So if you are putting a ban together to solve a big problem, this isn't the problem solved because there's less than 1% of all U.S. homes that are owned by investors. And if you look at it today, investors are actually selling more than they are buying. They are net sellers, which means that they're actually creating inventory on the market. So if there was a time to do this, it would have been many years ago. The time now makes people feel good, I guess, to stick it to the man, which I certainly get. But at the end of the day, we need to be focusing on other things if we want to accomplish our goal, which is affordability.
Yeah. So number wise, not very significant of their effect on the market. And what they were trying to pass was this idea of like making them sell in under 7 years if you're bringing forth these markets.
Yeah, this is the big thing. So everybody, I think, was looking forward to this bill and legislation coming because it had the potential to really increase affordability largely on the supply side. And for me, my personal opinion was like, the narrative on the institution is what it is. It's fine. It's not really going to have an impact, so I don't really care one way or another.
Yeah.
But that was before this 7-year rule was instituted. So the House got a chance to put their legislation together in February. Didn't include this 7-year rule, which I'll explain in just a second. And then out of nowhere in March, the Senate passed their version of the legislation, and it included the 7-year rule. This became a big issue for everybody.
Yeah.
And what happened was the Senate put in this rule that institutional investors must sell their single-family homes within 7 years and only to individual homeowners. Now, what's actually happening, institutions are actually helping with the supply side. It's called build to rent. Institutions, JWB, would be categorized as an institution because we own more than 350 homes. We build 300 to 400 homes a year. So we're bringing 300 to 400 homes to the marketplace.
To an undersupplied
market. We're helping with affordability. And there are many other institutional investors that are doing the same. So we can ban institutions from buying, but let's not ban them from building and creating more supply. Well, when you tell an institution that they have to sell that home in 7 years, it breaks the business model.
Yeah.
And so by doing this, what happened was the debt and the equity and all of the financials behind build to rent said, you know what? I'm not going to play in that game anymore. And so the demand for build to rent and the money behind it evaporated once the Senate came out and did this. And so from that point forward, industry experts, lobbyists, and many who want affordability said, you know what, we're creating a problem here through this 7-year disposition rule that it doesn't need to be that way. We can still ban institutions from buying, but when they're adding supply, let's not get in the way of that. And so, yes, here's John Burns, who's a wonderful consultant that we work with.
They got some good advice, right? Like the experts were basically saying, not a good idea. House went back, fix this bill.
So that's the big update here, that the House did fix this with their version. And they removed the 7-year disposition rule. They created exceptions, which were previously there, which allow institutions, JWB being one of them, because we do own over 350 homes, to do build to rent or to build our own new construction homes and to renovate to rent. And there is no 7-year disposition rule in the House's legislation. Now, the Senate and the House have to come together and do reconciliation and make sure that they have one uniform bill. So we're waiting on that, but we're very hopeful that, and it's looking like that 7-year disposition rule will be eliminated, which will get us back to, I think, what we all want here, or legislation that creates more affordability and really helps the problem, not hurting the problem.
The other big headline out there is this idea of property taxes in Florida being eliminated. It's been quite a ride, right? Like it's been from a, hey, this feels like a circus stunt, to like, hey, this looks like it's getting some steam, to now it's something we're really talking about. You catch up?
It's caught us by surprise as far as how quickly this has gone from an idea presented by the governor on some videos and social media and things, to now it is going to be on the ballot just 16 months from when the story started to take shape. That's incredibly fast, and it does have large, wide-ranging effects for us here in Duval County and Jacksonville, across the state of Florida, and I think across the country as well. This is, the governor is very strong in proposing that we reduce and potentially effectively eliminate property taxes for primary homeowners, homesteaded homeowners here. And there's pros and cons, which we'll go through in a couple of minutes here. But ultimately, today, homeowners have up to a $50,000 homestead exemption on their primary residence. And the legislation that will be on the ballot will increase that homestead exemption to $150,000 in 2027. Again, to $250,000 in 2028, with a future goal towards effectively eliminating property taxes. This would make Florida the only state in the country which has no state income tax and eventually would have no property taxes as well. So you could see that would be a claim that governor would like to be able to make to increase population growth in the state of Florida.
Sure. So it sounds like there is plenty of argument between supporters and detractors of this thing. Sounds like there's a lot of truth on both sides, right, GC?
Yes, and if we just think about this with our rental property investor hat on, if we had no property taxes, and again, we need to think beyond just rental property investors when you're voting, but if we only looked at it from that lens of being a rental property investor, this would dramatically increase our return on investment. Because what would happen is you would have even higher population growth, that would be even higher demand for housing. We are already undersupplied for housing. And so ultimately, if you have low supply and higher demand, that would increase prices. So this would not eliminate our property taxes as rental property owners. This is just for primary homeowners. But our values of our assets are based on what is selling in our neighborhoods. And so instantly, another home that's owned by a primary homeowner would be able to have a higher price, because you could have the same payments because you no longer had property taxes, but the price would be higher, and ultimately it would increase home values for everybody here. So if we're just thinking about the best return on an investment as a rental property owner, through that lens, this would be good. However, there are equal and opposite, and potentially the way that you think about it, potentially more downsides to doing it, which is important to think about.
Yeah. So, back to this slide, as a rental property investor, this doesn't mean I'm not paying taxes, but it would mean population growth, more demand for homes in my state, which drives up home price appreciation for me if we're looking at it from a rental property investor standpoint. Downside here, as far as what the critics say of this act, is less public safety funding, less infrastructure funding. Revenue must be replaced in some way. So someone's going to pay for this, and we're still not super clear on what that looks like. Fewer discretionary investments, such as downtown revitalization, economic development, community projects that we talk a lot about here. And at the end of the day, the unintended consequences. This is a unproven method of doing something So we don't know what the externalities are going to be. So the critics ultimately say property tax reductions could reduce fundings for services and investments that communities rely on, and we don't really know how that ends up affecting long-term payments.
Yes. Ultimately here, nobody really knows the numbers on the thing. There is a lack of information when it comes to the numbers, and I think that is pretty scary. I think ultimately we all want more affordability. If there's a way to do it and reduce our property taxes, I think everybody would be in favor for it. But the things that we're potentially giving up are very, very important. Public safety infrastructure, those things, it's not just Duval County that depends on that. Think about smaller counties out there that really don't have as much of a revenue base other than property taxes. So and nobody just knows how the numbers are going to shake out. So I'm excited to learn more about the numbers. Our mayor Donna Deegan held a press conference about this recently, and they estimated that the budget for Jacksonville for Duval County would be decreased by about $300 million if this act was in place. She obviously is not for this. And she talked about some of the discretionary investments that we would not be able to make as a city and as a county if this goes forward. She specifically talked about things like downtown revitalization, economic development, and some of the community parks and projects that are very, very critical. So again, now if I'm putting on my hat as a JWB owner of rental properties, and we think about all of the momentum that we have for downtown Jacksonville, and we understand that when downtowns become revitalized, what does that do for your home values and for rents and median incomes and quality of life for everybody here? I could create another argument in my own head and say, you know what? Maybe that's not good as well. And so I really would just encourage all of you to, if you're in the state of Florida and you'll be voting on this, become informed. I think, the vote is in November. It's June right now. You have 5 months. I hope these numbers come out and that you can make an informed decision, but this isn't a simple one. And I do think that this is going to be a very, very close vote. The legislation needs 60% in order to take effect, 6% to vote for it. And so I would really, really encourage you to be an educated voter on this in the state of Florida, because I do think it's going to be very, very big and important topic.